Ladies and gentlemen, we have seen the CPI data released, the inflation data in the United States, and generally speaking, inflation data is a major catalyst for traditional markets, even Bitcoin, to move upwards or downwards quite dramatically. Now, that inflation data came in slightly bullish, and so traditionally you would expect Bitcoin to move to the upside upon that inflation data releasing, but I think Bitcoin has stagnated here, and I think what that does is it proves that this level, this region between around 106,000 and 108,000, this hurdle that Bitcoin has above it, is very, very strong, and it's multi-layered. Okay, it's layered with things like the weekly chart, the USDT dominance chart. Okay, that's very, very strong, and that's a level we've discussed many times in this YouTube channel. We'll discuss it again today. It's also layered with the 14-year ascending resistance line on Bitcoin, the biggest ever line Bitcoin has that remains valid to this day. We've discussed both of these things in prior videos. But one more thing I want to discuss today, which actually my friend and co-analyst Megawell Crypto discusses quite regularly, is the 62.09 level on the weekly chart RSI, which is actually indicating that Bitcoin is in a position in which it likely will move to the upside again quite shortly. So I'm going to start by discussing the short-term Bitcoin price action with the CPI release. There's not much to look into there, but I do want to quickly brush over it. Then I'll look into the USDT dominance chart, and then I'll move through to the 14-year ascending support line. Then I'll end it off by discussing the important thing, the fresh thing that we haven't looked at before, which is the 62 level on the weekly chart RSI. All of these things are quite important, actually, but I do want to end off on the optimistic note. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. So Bitcoin, of course, moved above its descending wedge formation, which it held for months on end from November all the way through to April just last month. And in the last month, it's seen very bullish price action from 85,000 moving all the way upwards to 106,000. And now it sits in a macro range, which is best identified using these yellow lines here. These yellow lines actually go back to the 2017 bull market top and the 2021 bull market top respectively. And you can see they've been acting as major resistance and support zones in decent lengths of time, increments of time throughout the last, let's say, 6 months on Bitcoin. We've been bouncing between them for a while. We went below it for a while. Now we're back above it. We've flipped it for support. And these yellow levels here, which currently stand around 113,000 to 193,000, I should say, are just clearly our macro support levels, okay? Those are the levels that really matter right now. Now, within this macro support range between 93,000 and 113,000, we have another important level, and it comes from the volume profile. It comes from the POC on the volume profile, currently sitting at around 97,000. I've always said within this range, in fact, the last few days I've been saying quite regularly, that if we do see a pullback, it wouldn't be the end of the world, given the major resistance we're facing right now, which I'll discuss more in a moment. And if we did see a pullback, a healthy level to pull back to would be that $96,000 to $93,000 region, given the fact that the POC on the volume profile rests at 96 and 93, of course, is the bottom of our macro range. When I say POC, I'm referring to the point of control literally meaning the area of most support on the price chart you see on the screen going back to November, that currently stands at around 96,000. So there's a major support range on Bitcoin, a major bouncing range between 93 and 96, which will act as a trampoline if we do happen to drop below into that price region. If we're looking at the short-term charts, we can see we did see a breakdown on Bitcoin yesterday, but it's been recovered to a decent extent right now. However, we're not in the clear quite yet because we've actually seen a resistance support flip from that channel formation, and we've seen yet another rejection from the RSI and the hourly chart as well. So continued downside price action at this point in time would not be unexpected or surprising at all. Again, as long as we hold that $93,000 to $96,000 region, absolute worst case scenario, 88,000. We're looking quite good on Bitcoin still. Short-term pullback is not anything to be feared. But the question is, and this is something you may be interested in, something we tried to discuss yesterday, why are we pulling back at all, right? What's stopping us here? Because on this chart, there's nothing I've drawn above where we are. So what are we rejecting from? Well, obviously we have a short-term channel formation. It's one reason we're going downwards, but that channel didn't come out of nowhere. That channel has formed because we're brushing up against major resistance in this zone that you can't see on the regular Bitcoin chart, and hence many analysts are missing as a whole. That resistance partially is coming from this 14-year ascending support line on Bitcoin, but it's coming from many things. It's multi-layered. This is just one of the layers. But this 14-year ascending support line and resistance line on Bitcoin is currently acting as resistance. As you can see, we're testing against it right now. Now, you might think, oh, this line looks ridiculous. You've just drawn a random line. Simply not the case. If you zoom in, you can see the interactions we've had with this line on Bitcoin over the years, 14 years, over a decade, right? A decade and a half, have been nothing but precise, okay? Over and over again, rejecting, bouncing from this line, marking the COVID bottom, rejecting, bouncing over and over again with very few fake outs, very few significant fake outs. In fact, I think one fake out total. And right now you can see this level is acting as resistance right here at 107,000, which is, again, one of the reasons why we've rejected from this short-term price region. But that's only one of the reasons. Another one of the reasons, and first of all, no one's even talking about this, but I guarantee you no one's talking about this because people don't look at this chart unless they're actual good analysts. And that's very few and far between on YouTube these days. It's the USDT dominance chart. Now, similar to the Bitcoin dominance chart, it measures the strength of USDT, Tether, the stablecoin, in relation to the rest of the cryptocurrency market as market cap share percentage. So it's currently at 4%, which means that 4% of every single dollar in cryptocurrency is sitting in USDT. Now, USDT is a stablecoin that people use to buy coins with. And using that logic, if the market share increases of USDT dominance, all right, that means that people are selling cryptocurrency into USDT. And hence this chart going upwards is bad for cryptocurrency. And this chart going downwards is good for cryptocurrency. So we want this chart to go downwards. Now, the reason why this chart, which is on support, is offering resistance, is because we want it to go downwards, and hence it being on support means it's at a bouncing zone, which means that's bad for markets, and hence markets at resistance. This chart is, as I said, on major support, diagonal support, stemming backwards from 2018, which has bounced from on multiple occasions over the years, right? 2021, 2019, 2021 November, it marked the cryptocurrency top. In fact, literally, think about that. This chart, this single line that we're testing right now, marked not only the top in 2021 via support retest, but also the first top in 2021 via support retest, right, on cryptocurrency, on Bitcoin. This chart is reverse correlated to Bitcoin. So when it's on support, that's bad and resistance for cryptocurrency. It marked the top in 2021 on both occasions. It's also marked the top back here in March 2024 before 8 months of consolidation. And right now we're retesting it again. We need this line to break downwards. And it's right here, right where we are right now. That's where we're facing support. So on Bitcoin, if we're translating that, the USDT dominance chart is offering resistance right here at around 106 to 107,000, just like the 14-year ascending resistance line is. Now, it gets a little bit even worse than that. We look at the total 3 cryptocurrency market cap chart, the altcoin market cap, and we see macro resistance stemming backwards from February this year, even further back into January this year, which is being tested right now again and being retested and currently rejecting from. Now, the good news is we are on a cup formation, and so we should eventually break it to the upside, but currently it acts as resistance. So you can see the layered resistance on Bitcoin, not only just coming from the Bitcoin chart, right, but coming from more complicated Bitcoin charts like this 14-year ascending resistance line, coming from the USDT dominance chart, and coming from the altcoin market cap chart. This is what I discussed heavily yesterday. Now today I want to give you a glimmer of hope, right? And let's be real, I was not pessimistic at all. I'm not pessimistic. I do think these lines will break, and as I said before, I do think a pullback actually would be healthy down to 93,000, 96,000. If we go there, I'm not concerned at all. But I actually do think there's another reason to be optimistic, and that is this weekly chart RSI level that we haven't discussed before. Again, shout out to Megawell Crypto. He discusses this quite regularly. All we need to do is draw a horizontal line on the weekly chart RSI at the 62.09 level. And you can see, if you look at the chart observationally on the RSI, there's very interesting interactions we've had with this line in the past. It's been very influential, again, with fake outs. The fake outs are there, but overall, it's been influential. It's been a support and resistance level, and it's taught us a lot about the Bitcoin structure. And that is because it was the origin of RSI price action on Bitcoin on the weekly chart. The RSI started at 62.09. And from the very start of Bitcoin's price action, it has hence been an influential level. Within months of the start of the weekly chart RSI, we found our bottom on the 62.09 level and skyrocketed to our 2011 high pre-first halving. We've done it over and over again in the past, right? Finding support, resistance, support, resistance, resistance, support, right? Yeah, there's fake outs. There's plenty of fake outs, but that's because it's been around for so long. But even to this day, we can skip through all these levels here. You can see them for yourself if you want to draw it up. It's very easy to get up on the screen. But even to this day, in the last multiple months on Bitcoin, this line has still remained valid. We can see it marked our top back here in June 2023 before going downwards for our final swing before breaking our bear market resistance. It also marked a bottom here in May 2024 during our consolidation range, and then later a resistance which we formed and held for 6 months or 5 months on end until November that same year last year. It marked major support right here during our double top. We eventually broke that down, then it acted as resistance. We broke down properly, and now we have flipped it once again. Now that is a very good sign, because generally speaking, when we flip this level, it leads to a market upswing. Now obviously it's not perfect, doesn't have a 100% success ratio, it's not the most accurate indicator ever, and that's probably why I haven't looked at it too much in the past, but it is a good thing, that's for sure. And given the fact that Bitcoin is in a macro cyclical bull market, these resistance levels, these hurdles, shouldn't necessarily be a massive cause for concern as long as we don't go too far down in the short-term charts, because we have the macro cycle giving us the bullish underpinning for this move, and because we have things like this weekly chart RSI showing us that even though it looks like short-term weakness now on Bitcoin, it probably won't result in longer-term weakness unless we go downwards too low. So although we face major hurdles here on Bitcoin, I am taking the optimistic approach at this point. I do think that any pullback will be a bullish pullback unless we start breaking things like the $93,000 region. Then my eyebrows will start to get raised. Then I'll start to get concerned. But until that point, I don't see these major resistance zones and resistance levels as a super big cause for concern. That doesn't mean that de-risking is stupid, okay? De-risking at major resistance is never stupid, and you can always buy back once it's broken, but obviously the choice is up to you in that regard. Before we end off today, guys, I want to give a quick mention to the post I made in the community page. You can go to my YouTube channel homepage, click on posts, that tab right there, and drop a question. If you want me to answer a question that you have about the cryptocurrency market, anything you want about Bitcoin, altcoins, anything, macroeconomy, I'm going to be doing a Q&A video tomorrow or the day after, answering your questions directly. All right, so now's your time, right? You can get a question there, I'll answer it, just chuck it in there, anything you want. Before we end off the video properly, I want to check out the Bitunix Exchange with you here. I mentioned it at the start, I'll mention it again now just quickly. It's a global non-KYC exchange. It's never been hacked before. Very low trading fees, no VPN required to use this exchange or to sign up. So that's very good stuff overall there. And with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as, listen to this, down below on the screen, you'll see $8,000 in trading rewards for newcomers using that link down below. So use my link to sign up, get access to a good exchange. I use it personally. It's my primary exchange that I use daily. So check it out if you're interested, guys. Thank you for watching. Hope you enjoyed. I'll catch you soon.